What's up, guys? Kunal here. Bulls on Wall Street. Holy shamoles. We've got some action that's been really happening in the market. We got a rug pull today, right in the middle of the day. Really the kind of the worst scenario that we could have had because we had a gap up and a nice spike in the morning. And, we're starting to break some key levels of support. So today's video, we're going to look into the market indexes, really dig into what the heck is going on and why. We have multiple cross currents that are in confliction. We've talked about this for a long time, that, we are entering a period of distribution in consolidation in the markets. Like, we're not in some bear market. We're at the exact same price we were in a couple months ago. So this is just your classic, right? Same price as we were in May. Your classic range-bound distribution market, and we can see that via the price action. Things got Gennard today, no doubt about that. Let's dig into that. So I think the big event for today that I thought was important was that the QQQs broke under the 50-day moving average. They were holding for a period of time. But listen, when you think about support and resistance, the more times you test the level, the more likely you're actually to break down. So as you're like testing it and testing it and testing it, okay, it's holding, it gives it value. But as you keep testing it, it's making that support weaker. You're soaking up the demand in that area that's holding it up till at some point you rug through. And so we have a key breakdown on the QQQs that is going to be important, because for me, the 50-day moving average is your intermediate short-term trend. When the market is below the 50-day moving average, I believe that it's a day trading only environment, no swings. You also get the VIX tends to rise, into the 18s, 19s, 20s, 21s, usually when this happens, and you get a lot of gaps in the market. And so it becomes a scalper's day trade market. This is not really the time to push it. If you're a day trader, you're going to have big range. You don't have to trade big size because the volatility will be pretty big. So this is an important event. We'll see kind of what happens tomorrow. My gut feeling is if we gap down big tomorrow, say we get down into like something like this, or even down here, the market's going to have a really nice long day for the day. But for now, the trend has been broken, and it has been for quite some time. We're just in a period of consolidation. Does not mean we're in a bear market or anything like that. I mean, frankly, we could come down a decent bit away and still be in the bull market. And so we just have to kind of take that all into account. The SPY also broke the 50-day moving average. Guys, this is huge because, we tested and we didn't even have 3 or 4 days of testing, right? We tested, and the next day we rugged through. And so this becomes important. See the short-term moving averages? Your 9 EMA is curling down. That means your short-term trend is down. Your 20 SMA is curling down. That means your short-term trend is down. The volume is picking up on this stuff. And we're not even oversold yet. So we're at 29 stochastics on the SPY. We're at 38 on the QQQs. And so we're not even at some like extreme oversold level. We really just had one big down day and a lot of grinding. So this is like a weird spot because, yes, I think if we gap down big tomorrow, we're going to get a nice flip for a long, but it just may last a day. We're going to be chopping around into this range for a little bit of time, I think, to kind of just digest this big primary thrust. And so this is a day trading only environment. Remember, when the market is under the 50-day moving average, you get a lot of gaps. The VIX tends to rise, and your overnight holds tend to just, breakouts will fail, all this kind of stuff. And so this is classic distribution action. If you look at the intraday chart on the QQQs, this is how distribution works. Like, you get a gap, and then you roll it off, right? And, anytime you see strength, you just roll it off. And this will happen. Like, see this day here, you get a gap, and you roll it off. And this is like, any kind of spikes, you're just starting to roll them off. Like, see this day here, right? You get a gap, and you roll it off. And so, like, you're rolling it off, rolling it off, rolling it off, rolling it off. And so that's your classic kind of spin cycle, wishy-washy spin cycle action where you're churning through the demand and supply at levels. And it's a healthy thing, I think, long-term. We would have gone through this in some manner, whether we had this war stuff or not. We would have maybe had a little bit less volatility, And, but we would have still probably had some level of this kind of churn. It's needed. We got to let fresh buyers come in. All these stocks are super exhausted anyways, right? Nvidia's $100 goes to $1,000. Meta's at $100 goes to $500, right? Netflix at $150 goes to $600, so on and so forth. And so we got to have this action anyways. But I would just say be careful right now. This is not the time to get rich. Everybody thinks that when the market gets volatile, that's when you want to really, put your nuts on the table. That's not actually true. You want to do it when the volatility is really, really low. I think that's when you're going to have a lot more ease of use when you're trading. Let's take a look at some stocks here. Tesla's at a very, very big sweet spot today. Dude, they had, so this is, multi-time frame. This is your weekly chart, 15-minute, hourly chart. So you can see on the daily here, just really at a big, big spot here. Man, that 165 breakdown was huge today. What can you say, right? This couldn't bounce at all when the market was hot. What do you think is going to happen now? And the layoffs, I thought maybe would have been, something that the market looked at wisely, but they did not. Amazon, really nothing burger here, right? Probably maybe a test of the 20 EMA, but it's been grinding for so long. This, yes, it's a trend, but when the trend is this slow, it's just grinding higher and it's moved 10 points in 2 months, that's not really something that's a fun trader or even worthwhile. AMD is a bear flag, but it's been a tricky little vixen trying to short it low. So you do got to be careful on this one. You can only hit it on spikes. It's a little bit tired. It's just grinding down here, but a little bit tired. And QQQs, we already talked about this. This is the breakdown here. If we get a gap up tomorrow, we'll probably have to fade it. If we get the gap down, we'll flip it for a long at the open tomorrow. Google, it's still the strongest out of the group, but you can see this has got a little bit of time to come too. Apple failed breakout at the 50-day moving average. Netflix at the 50-day moving average. This one is the one, you got earnings in a couple days, so I'm not going to be trying to mess with this one. It's also slowed down considerably. It's got a huge spread. I don't like trading stocks with huge spreads when the market gets super volatile and the VIX gets a little shaky and a little nasty, because if you look at Netflix a lot of days, when it's half an hour into the market, it's still only done a handful of hundreds of thousands of dollars in volume, a handful of hundreds of thousands of shares in volume. And so it's just not, I want to be where the liquidity is right now. So, I want to hit some of these kind of things, right? So if we gap down tomorrow, if we get Meta off the 50, I think that could be something. It hasn't tested the 50 since in all of 2024. Once again, I think this is a flip. All these things are priced for perfection, and they're already entering long periods of consolidation. But the odds of Meta gapping up another $100 like it has, or $50 as it has on all these earnings, is probably pretty low. Old Nvids, right? The Nvids, old Nvids, you got a date with the 50-day moving average too. I'm a buyer of these two off the 50-day moving average if we gap down. If we grind into it, probably not. And it's just a flip, not an investment, not a swing trade, right? Day trades for now. Under the 50-day moving average on QQQ, it's a day trade only environment. I'm a buyer if we gap down in the market tomorrow. We test the 50-day moving average. Otherwise, nothing. If we gap up tomorrow, I think we keep trying to fade a little bit. That's been the play, and it's been the play for a little bit of time. So we'll keep trying to fade this bad boy. You don't have to do too much else tomorrow. I would not even spend a lot of time going through a million little stocks. There's just not the heat on them. There's some stocks holding up like MU, but frankly, look at this. If this loses this 120, it's probably getting dusted tomorrow. So it's got an inflection point too. And if we lose this and the sellers just pop in, you get a lot of room to fall on this. Obviously, if the market holds up, then, you also have a nice sweet spot of a flag. But frankly, flag patterns are some of the things that get shorted and are the easiest shorts, right? When the market gets nasty. So just be careful. I don't think you got to go in crazy with anything. Add in maybe like a UVXY or something like that for a volatility ETF. I thought that gold was a good trader today. You had this reversal. You had the opening gap fade, tapped right into the 9 EMA, and then, right, you had this big kind of nice run in this. It doesn't seem like much, but if you're playing, say, the 220, calls or something like that, right, you can, That's a big cheddars right there for gold, right? So you got a lot of action on some of these things. Keep it simple, guys. The market is in a very, very treacherous spot, I think. Not that it's going to crash or anything like that, but the risk is high. The risk is high. The fugazis are coming. Like everything is a little bit more, everything's a little bit harder right now. So there's a time and place to, right, put your nuts on the kitchen table, and there's a time and place to just scalp away and make some income and go about another day, right? So be careful tomorrow. I'm not even trying to play, right, any of these like crazy names. When you see stuff like this, like where you have like these breakout setups like AMAT and stuff like this and they fail, that's like, that to me is a classic distribution, right? When you have these flat top breakouts, these like setups, right, a month ago or 2 months ago, you would preempt them, right? Even before the breakout, they just explode 10, 20, 30%, right? Over a handful of days. When that's not happening, then that's telling you to take the foot off the gas. So just be careful. This is not going to last that long. They never do, but you do want to be in capital preservation mode. You can still make income, but you got to be safe, all right? I love you guys. Take care.